Yeah, I like looking at my charts now and I know exactly what I'm doing, where I need to be at. That's it. I don't need to, I do check it during the day, but not like before. I do set alerts, but not like before. Just to keep, my eye on the ball and still see what's going on. But thank you, man. I appreciate it a whole lot.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Are you ready to finally learn how the market really works? Well, now's your chance. I have a free book for you over at secretinvestingbook.com. And this outlines 13 of the biggest secrets that Wall Street doesn't want you to know, like how to get a positively unfair advantage in the stock market. This is everything you're going to need all in one place. And the way to get this is by going to secretinvestingbook.com. Now, this book is free. It is free for you. I paid for the book. I just need you to help me out by covering the shipping from our office to your house. So go to Secret Investing Book right now, get your free copy today, and I'll ship this out right away, and you can get the positively unfair advantage in the stock market by reading these 13 secrets that Wall Street does not want you to know. So get your free book over at secretinvestingbook.com today. The How to Trade Stocks and Options podcast is now exclusively on sharevision.com, the first dedicated streaming platform for the world of finance. And that's where you can find us every single week over at sharevision.com. Just head to sharevision.com to learn more and type in 10-minute stock trader in the search bar. Come like and subscribe. I can't wait to see you over there at sharevision.com, the first dedicated streaming platform for the world of finance. All right, cool. Well, Kavan, we are recording now. So go ahead, man. Tell me about yourself. Tell me about your trading journey. I would love to hear about that and talk to you about, what's changed since joining the trading room and, your mindset, everything like that.
Well, it's making the leap this year to trade is more of a, for me personally right now, of a health reason. So my job is I'm a automotive technician at Mercedes-Benz.
Oh, very cool.
Yes. So, I run a team over there of guys. So for me, it's mainly health reason to stay home with my son and for my health. I have a little bit of autoimmune sickness, and I think from the fumes from the shop and stuff like that is causing me, a little irritation at times. So I want to get out of that business because of the direction the automobile business is moving all electric.
Mm-hmm.
So it's a matter of time before it shrinks down. They get rid of technicians, the older guys, stuff like that. So I have to pivot. I don't want to be 55, 60, and I'm stuck in a place where you can't make no money, because automotive business is not, you don't get paid hourly. You get paid, the amount of cars you work on that week. That's how we get paid. So I came across this trading group, these set of guys called AMU Academy, Aristotle Investment. I don't know if you ever heard of them. And my sister-in-law bought me that trading course as a gift for my Christmas present. So did that. It's a 30-day live, it's three guys, Aristotle, Unraveler, and Mike.
Mm-hmm.
But they're day traders. They're like scalpers. So I'm watching these guys online making a lot of money, and I'm like, wow, let me try and see if I can learn this, in my spare time. So I dedicated myself this is in August last year, dedicated myself. I did the 30 days. It's 2 hours every night, Monday through Thursday. And then Friday, you get a little bit of homework, do the tests online. And you get at the end of the course, they give you a certification.
Oh, cool.
And that laid the foundation for me of understanding. To be honest, when I was finished, I didn't know anything. At the 30 days, I'm like, I was still at the same place. I was like, I looked at my mom, I'm like, I think we just waste $450 because I still don't know, anything about trading. Yeah, fair enough. I know how to go on Robinhood and buy a stock, or on Webull and buy a stock, but that's the most, and I had some cryptocurrency, it's the boom. So you buy a little bit of cryptocurrency here, you FOMO, you're trying to catch, a little spike to make a little bit of money. And I'm like, wow, didn't know anything. So I sat down, I went back to the course, and I hear them talk about price action and moving averages. And there's a section in the course where he sat down and he show you how to set up trading view. So I say, you know what? Let me go on trading view, sat down, set up trading view, and I learned each individual moving average that week. What's the EMA? What's the SMA? How does it work? MACD, RSI, slow sarcadic. So I add those on my chart and I started watching what price was doing, how was it moving. And then I started looking for breakouts, started drawing trend lines, looking for breakouts. And that's when I created the Discord that I have that I told you about. So I use that to archive everything I was doing. So when I find a stock that I think it was going to break out, I'll draw my lines, I'll leave it there, and I watch it for a day or two and see what it does. I don't know if it was beginner's luck, but most of the time they were breaking out based off of the trading I got from those guys. But I know how to enter the stock, never know how to exit.
Mm.
So I remember one day I was up on Airbnb. This is in November now. I'm up on Airbnb. First, I jumped in. I bought 1 shares of AMD. I got stopped out because I set a stop loss right away. Me and my stop loss, And then in the same time, I bought 2 shares of Airbnb. Got stopped out of AMD. I was mad now. So I went in, bought 2 shares of Airbnb that day. And it went up for a little bit, then it came back down. It went down a little bit more. And I'm holding, and I'm like, oh crap. I only have this contract for a week. And I think it was a Wednesday. And I'm like, oh no. So now I'm down $1,600 in one day. So I'm at work, I'm at shop, I'm sweating. I got all these guys coming to me, and I'm like, I don't even want to talk to them.
Yeah.
So it went down. It went from 202 to 180. I bought it again, 1 shares at 180. And I'm like, I've got to make some of this money back. Right? It went down even more.
Mm-hmm.
So I said, you know what? I have $300 left. How about I buy it for 30 days?
Okay.
So I bought one more contract for 30 days.
Yeah.
After 2 weeks, I'm back up 200%. So I'm breaking even right now. I'm breaking even, and I'm there. It was a Friday now. I'm heading to Disney World, and I'm like looking at my phone. I'm like, should I sell this? Should I not? Because I did not know, how to take profit. I did not know to move a trailing stop, and I'm still working on that. So that's one thing that we want to talk about.
Absolutely.
And to be honest, I watched that stock turn into a loser again. Didn't exit the trade. Turned into a loser. I think I only made out of everything. I end up out of the 60. I think I end up with like 90. That's all I end up with. Right. And when I set up the Discord, there's Benzinga. I have a Benzinga YouTube stream in there. So whenever Benzinga have an alert, it will show in my Discord.
So you went through this course. After you went through the course, you were trying to trade on your own, but you felt like you hadn't learned anything. But then they gave you some other indications with moving averages, price action trading, things like that. And that sort of spoke to you in a different way. And then you got into trading, almost like revenge trading, right? Where it's like, I can't believe this is happening. I'm going to make my money back no matter what. I'm going to
make my money back no matter what.
Yeah.
That as I said, that course laid a really solid foundation. It's just that their method of how they trade is not suitable for me. I have a 9 to 5.
Yeah, I understand.
They're sitting at their computer. They look for bounces and stuff like that. Fair enough. If I was home, I could probably make money that way with their strategy. But I got a 9 to 5. So now I start looking for how to swing trade and, what is a swing trade and stuff like that. So I started looking for setup instead of day trade setup. I started looking for swing trade setup. And then I remember, back testing the crossover, the 8 and 21, back testing some, back testing this. And I'm watching these stocks break out, but I wasn't buying anything. I was just testing and whatever. And then I was at work, because when I'm at work, I listen to a lot of podcasts. So I got my phone in my pocket, put my Bluetooth in. So I saw your face popped up and about back testing and stuff like that. So clicked on the video that day and I was blown away. Within that one video, I learned so much in that one video. I shared a video with my guy with 5 of my guys in my group
Awesome.
chat,
Yeah.
right? That same video. So I could go back and find it, but not right now. So I watched that video and I'm like, wow. I went back and I applied all the stuff you talked about in that video, and I started getting more stock, watching more stock breakout, watching more stock breakout. But I still did not know how to exit a
Mhm.
trade.
Mhm.
And I think we had this conversation in the group chat. I think I asked that question and you came back around, and the day after you did a video and you actually answered the question. But the night before I watched one of your video and you did answer the question in that video. So with the 10 EMA, and I'm like, cool. Now I know how to exit a trade. So that's when I started paying more attention to you. Signed up and got TrendSpider, start back testing, got it set up. But I was listening, but I wasn't really paying attention until last week you did a let me tell you, it was earnings on a stock. You had earnings on a stock and you had the setup where you you check to see, expected move.
Mhm. Mhm.
The expected move on the stock. That's when I started paying attention to you a little bit more.
Okay.
Because you exited that stock before earning based on the expected move, whether it was going to move up or down in either direction, and it broke through the trend lines. And you're back testing trend line. You're like, nah, I'm getting out of this. And you came back to that stock, and I'm like, I was there like, what? Did that just happen? So that weekend, I went and I watched like 30. I went back over all the videos through the week because
Awesome.
as I said, when I'm at work, a lot of time I'll come in the group and I'll give you a pound,
Yeah.
and I put the phone right back in my pocket.
Gotcha.
So I'm listening. I'm not watching.
Cool.
I'll watch it when I get home, but when I get home, sometimes I'm tired. I'm barely watching. I'm not taking any notes. But after that, I started paying attention. I wasn't, to be honest with you, I wasn't putting on all the lines on my graph, the ATR and stuff like that. That weekend, I started. And once I started to watch everything that you guys are doing now, paying more attention and stuff like that, I'm getting it more and more and more. And I'm watching these stocks today, and it's like I have Peloton and Fastly, and I'm looking at them and they're following the back test as planned. And I'm like, I'm telling my friend Rob, and I'm like, yo, I'm happy. And he's like, why? I'm like, I finally found something, a setup that I can use. I can go in there. I don't need anybody. I can go in there and I can make the trade my own. I can follow your steps A to Z, and I can plan my trade. As you said, 10 minutes a day, no hassle, no headaches, ain't got to stress. And he's like, for real? So no, I have him taking the previous course that I took because it laid a foundation for me. And I'm like, if you understand what these guys are teaching, then hop on over to Chris, because these guys are going to lay a foundation with the little fundamentals, like the basics.
Mhm.
And then you when you transition over to Chris, then you will start understanding a little bit more. So you put in the roof on now. They build the foundation. I did my little thing. You put in the roof. I'm eventually going to learn how to put some furniture in the house. As you can see, it's empty. So that's the goal, man. And I'm loving every minute of it. And the way you teach, it's simplified. And I ain't got to sit there and draw no trend lines. I ain't got to look for no breakout candlesticks. Like, which candle is this at the end of the day? Is it a doji candle? And I'm like, I'll never learn to read candlesticks pattern. Like,
you probably know candlesticks better than I do at this point. I literally don't know anything about them.
I'm like I'm online on Amazon looking for a good candlestick book to learn to read candles. I'm like, I'm not learning none of this stuff. I'm just going to pay attention to what Chris is doing. I put the lines on there, and dude, I take screenshots of them and I look at them every day, because yesterday I was showing everybody. Like, I call all the guys, because I have all the guys that come in the group is guys from my work. You got Josh, Daniel, Chris, and Rob. They happen on the live when I invite them over and they love it. I got
Cool.
everybody, asking question. Daniel is on there asking a lot of questions. He actually went and got transpired. So slowly by slowly, everybody's coming to the table and like, want to learn because step by step is no stress. So we just
Yes.
got to learn the little nuance like eccentric values, the delta, that I did not know.
Come on. What you are describing makes me so happy because that was my intention. Like I say every day in the trading room, like I'm going to be doing this anyway, and we're
Yeah.
doing it together.
Mhm.
It's so cool, and being able to follow it step by step, it helps me, right? Because I mean, I know what to do, but following it step by step
A
keeps
step
me on track,
track.
right?
Yep.
And so that is so awesome. So, some of the things that I took away was this is more of a lifestyle that you can actually live with, right?
Yes.
And this, by the way, this is how like the big boys trade. They're not day trading, right? They're not looking at 5-minute cup and handle charts.
No.
They're not drawing. Well, some of them draw trend lines, but those trend lines they draw are really close to what the moving averages are, and that takes a lot of the guesswork away as well. Is being able to let the data tell you what's going on, right? And it sounds like you're a lot like me, right? It's not. I don't want to guess, right? I want to have confidence in the trades that I put on. I want to have the results tell me, hey, this is what I can expect. On occasion, it doesn't work out, but you keep your losses really small, right? We talked about the Mario analogy, right? It's you lose on level one, you lose on level one, you lose on level one, but the next time you might get to level 3, 4, 5, and even rescue the princess, get a huge home run. That happens.
Yep. So
Go ahead.
yeah, so I listened. Sorry to cut you off.
You're good, man.
I listened to your story in the beginning when you took the 401k, all that stuff. Like I was thinking about doing the same thing, because I also have a small. We run me and my wife run a small e-commerce store on Amazon, on eBay. Initially we had a used car business, but that kind of went under. Because I always prioritize my job over everything because that's my bread and butter. That's what keeps a roof over my family head.
Mm-hmm.
And I'm in a position where I can make certain decisions on my own. I don't have my bosses over me all the time. So that's my comfort zone. So everything else around that started to collapse. And I'm like, I can't do this. I can't do this 9 to 5 no more. Honestly, go leaving at 7, coming home at 9 o'clock. Last night I stayed at work late because I knew I wasn't going to work today because I want to get prepared for this, take a little bit of notes, the anxiety. I'm like, well, I don't know what this is going to ask me today, and just being home and be able to watch my son roam around, that's the lifestyle that I want. And I believe following your step-by-step method right now, I think I will be able to in the near future, live that lifestyle that I want to live, because why else we do this is to live the
Right.
lifestyle that we want to live. And you and I listened to you, Mark Manvini, you had Ryan on,
Yeah.
and you guys talk about small losses. Small loss. It's okay to have small losses. And I was like, it's not okay for me to have small losses with my account. And that's one thing I wanted to discuss with you today
For sure.
is managing risks. Um, you mentioned in the chat the other day that you don't set stop loss.
Well, in a way, I don't put it in the market, but I do put it on my charts. So I know, like we do every day, right? I know exactly where I'm going to get in and exactly where I'm going to get out. And that's kind of why, in fact, I'll tell you what, let me pull up the charts here. I'm going to share my screen with you. Let me know. Let me know. Can you see the screen?
Yes, I got it.
Cool. Yeah, this is the one you were talking about with the earnings, KHC, right?
Yes.
We entered the trade on February 4th. It's doing its thing, making a little money here, not really like going to town, but it's doing what it's supposed to do, right? It's following its back test, doing its thing.
Yeah.
And the day before earnings, we went and we calculated the expected move. And I said, look, I'm following the 5-day trailing stop here, which is the gray line. And I can tell very clearly that the expected move will break this trend line. And so I was like, the best thing you can do is get out. I mean, the expected move was all the way up to 36.10 when before earnings it was 34.66, right? So about $2.
Yep.
And $1.50 $2 there. And so it's like, you know what? I'm just going to take it off. I don't know what risk could be, right? Now, it could have gone the other way. It could have dropped $2 and, then we would have lost out. But following the plan here kept us out of trouble. Following the plan allowed us to take a little bit of a small winner here and just move on without any stress. And you mentioned that earlier. It's the step-by-step, no stress that really works for you. And I'm the same way, man. The last thing I want to do is sit and stare at a chart and stress about if it's working or not.
Yeah, that's what I was doing at work. I was running around with my phone in my hand and I'm like, I can't do this.
No, absolutely not. I remember the last time I day traded when I was like, this is not for me. I was sitting in this chair, looking on this monitor right here and just like sweating, watching it go. And at the end of the day, I'm like, I made $8. Was that actually worth my time to make $8 for the whole day? No, I'm done with this. So yeah, you talked about the exit points, right? So let's have a discussion on that. I really feel that the term trailing stop or stop loss gets the wrong mental aspect of what we're actually trying to do, right? So let's see if we can find a different one. That's a little easier.
Yeah, I heard you talking about the planned exit point yesterday as well.
So I am now from this point forward calling our trailing stop or our stop loss the planned exit point, meaning it may have a great day. It may have dropped, if we're short, it may have dropped $25, but our planned exit point, the point we're going to exit is fixed. Mm-hmm. It's not that we have a profit target. It's that we're letting it go as far as it can until it has basically proven to us, hey, I'm done. I'm going to go the other way now. And we can't decide that ahead of time, which is why when someone says they have a profit target, I look at them like they have three noses on their face, right? It's like, I'm glad you have a target, but that doesn't mean it's actually going to happen. So for example, in Fastly, right?
Yeah.
This one's working great for us. It's profitable. It's past our second buy point. And if by the end of the day, everything lines up, we'll go for a second one.
Yep.
But our initial trailing exit point was somewhere up in the $19, $20 range. And every day we're moving it down and down and down. And right now, the planned exit point we had set up yesterday was at 1784. But today it's going to be somewhere like 1865. So
you don't move your stop a half ATR, because that's what I was thinking, that you move that at half ATR or you move it down to where the 5 EMA is right now.
That's really good questions. So let me pull up our trading rules here and we'll discuss each point because these are excellent questions. Come on. So the planned exit points, right? Before the trailing exit point crosses through our entry point. So at that point, we have profits basically locked in unless something crazy happens, right?
Yeah.
So for Fastly, we have profits locked in of at least 50, 60 cents, maybe up to $1. Okay.
Yeah. Mm-hmm.
Now, like I say, anything can happen, as you know, we've seen. But at the initial offset, we're doing a half ATR exit point from entry.
Okay.
The half ATR, and you can just it's on every chart. You can find ATR, but I like to use the relative strength scanner.
Yeah.
Because it just calculates it for you.
Yeah.
So the half ATR in Fastly would be 1666 from today. So if we were to put one on right now, our half ATR exit would be 1666.
Yeah.
And we only do that until our trailing exit point passes through there. Once it's passed through there, every day we're moving it closer and closer and closer.
Okay.
Now, this is actually a really great example too, as far as planned exit point goes. Right now, it's over $2 away from our planned exit point we set yesterday.
Yes.
So when someone sees their open profits in their account, they're like, oh, I love my open profits. These are awesome. I wish I could take them off the table. But the thing is that with trend following, there will be times, and this honestly is one of the hardest parts of trading, is letting your open profits run as far as they can. And it's human psychology, right? It's like if I see $1 on the ground, is it worth my time to bend down and pick it up? What if I see a dime on the ground? Is it worth my time to bend down and pick it up? What if I see $100 bill? Is it worth my time to bend down and pick it up? Right? You've got to kind of balance that, but you can say, you know what? If I don't bend down and pick up the dime and I let it continue to work, further down the road, I might be able to bend down and pick up $1. And if I let it work a little bit longer, I might be able to bend down and pick up a $50 bill, whatever the case is. And that's what these trailing exit points is. We don't know where it's going to stop. So as exciting as it is to see those open profits, it's also nerve-wracking to see those open profits, right? Because you were mentioning earlier one of your trades that you had earlier, right? It's like you see the profits, you're excited about it, and you don't want them to go away.
No, you just want to see more.
You don't
and more.
want them to go away. You want to keep them. But Kavan, if you make $50 today, but if you keep it on in 2 weeks, that might be $250. I mean, I would rather keep it on and let it work.
Yeah, I understand that concept.
Yeah.
I'm liking that. But for instance, I have a small account, and the reason why I increased my position size yet is because I don't want to have a large position size. I think I'm going to go in there and I'm going to make mistakes because I want to grow that too fast, right? And I listen, as I said, I listen to you guys talk, and most of you guys, most of the investment champion and you included, didn't really start seeing a significant profit until like 5-7 years, and I'm like, even though I'm learning from you now, I'm learning from your mistakes and stuff like that, which is really good, because I think you set me further down the road. Instead of 5 years, I probably got to study and work on this for another 2 years to really start being profitable. So I didn't increase my portfolio size. I have $1,000 right now, and one of the things is, a lot of times I'll see these stocks that we put on, the trades we put on, and they'll be 6% down. And by the end of the day, they're only 2% down. And I'm like, what if I start like locking in those profits, like moving my stop down, taking some profit and build my account? Because that's one thing I want to do, but I'm going off your rules and your plans, and I'm like, that's not in the rule, that's not in the plan, but I really want to build a small account. What do you think about that?
Well, let me ask you this, right? If it's down 6% earlier on in the day and closes down at 2%, right? There's no way for you to know that it wouldn't have closed down 15%.
Yeah.
So that's why, for me personally, I had this realization talking to Steve Burns one day. He's like, look, just trade at the end of the day. That's when all the institutions are trading. That's the only data point that matters. And if you're doing back testing, it's only testing the end of day price anyway. So if you're trying to catch the low on each day, there's no possible way you could catch the low. As great as it would be, I would love to do that, Kavan. If you can figure that out, let me know.
Because the other day I was up on Dish like 86%, and I'm like, I'm gonna take this profit. So I was talking to my guys at work, and they're like, and I'm showing them, I'm like, look, based off of the strategy, I'm up 86%. So they're like, take it. You're not selling it. And I'm like, that's not a part of the strategy, And I ended up breaking even on Dish. I didn't say anything to them because I know what they're gonna do. Like, I told you to take the profit, But
go ahead. Good.
But as you said, I don't know if that could turn into 200% return instead of this 86% return. But I would like to build a small account, because that's one of the goals that I had, is to grow, maybe a $5,000 account at the end of the year, maybe $15,000, $20,000 if possible. I'm being realistic. I'm not looking for, if I get 100,000, it's fine. But realistically, if I double that by the end of the year, I'm okay with that. I didn't lose anything.
Yeah, dude, because you're trading with us every day, you're able to skip that learning curve, right? The learning curve that took me, 5 to 7 years to figure out. Everybody else, because you're watching me actually execute the trades in the way that I'm going to do. And I'm actually doing it like with actual money, right? It's not theory.
That's what I like. That's what I like. It's transparent. So I love that. I recommend this to anybody. I love the transparency. I love that I can text you on Twitter or you text me back. You know,
Dude, I'm as open book as it comes, man. And I think that a lot of people really gravitate to that as well. Cause like I'm not the guy who's flashing, Rolexes, and I'm not the guy who's flashing Lamborghinis or anything like that, right? I'm really more concerned about how can I help you? It's not, hey, look at me, I'm awesome. Because when I see people like that, I'm like, go F off. I don't care about you, right?
yeah.
I feel it's much more important to be relatable so we can have conversations like this, right? So
Yep.
I can be here for you. So, man, as much as I would love to say that we're going to pick the low every day, that also doesn't fit in our trading plan either, right? Because
Yep.
if you're going to do that and you're looking at your charts all day, it's like, well, do I take it off at 2 p.m.? Do I take it off at 9:30? Whatever the case is, you're never going to know. And that's why having that one data point and the one time to execute at the end of the day, that should resolve a lot of stress, Plus, with you mentioned growing a small account. And what I want you to think about right now is Mark Minervini, the best trader in the world. His return last year was 334%. So if we were to look at that in your account, that would basically take $1,000, add 334 on top of that. So your total value would be 4,300, right? That would be incredible. That's also the best trader in the world. You know what I mean?
Yeah.
And so that's another thing too. Like when people get into trading, they get, oh, I'm sorry. I really should stop sharing my screen. When people get into trading,
it's fine.
They get a little disillusioned by how fast it can happen. Because like last year, my best year ever, first year we really implemented the strategy over a whole year. I returned 172%. And like that's outstanding. Like 172% would get you like, trophies, in like the normal world, right? And I just don't want you to think that this year you're going to take 1,000 and make it 15,000, right? You gotta have, even though 172%, I know realistically we could do, you gotta somewhat be flexible with that outcome, right? Yeah.
For sure.
You have to be rigid with your plan, but flexible with the outcome.
Yes,
on every trade and over the year. Yeah.
That's what I'm learning right now. That's part of the psychology that I'm learning. I honestly, I was scared. The fear factor, I have the fear of losing my money. And what happened to me in November kind of, gave me PTSD every time I put on a trade. I'm like, but watching you put on these trades over the last 2 weeks, after I start really paying attention and putting everything on the chart, really kind of opened up my eyes a little bit more. And then the fact that you explaining, which I want you to dig deep into a little bit more, is as I said, the taking profit. Because I'm not understanding what you're saying when you said, because usually when I see traders move their trading stop, it's set. They're taking profit. If the stock reverses, they locked in that percentage, that the gain they just made. And I'm thinking that's the same way you're doing it, but apparently that's not what you're doing.
Well, we are, but we're doing it at the end of the day.
At the end of the day. Okay.
Right.
Okay. Got it now.
Absolutely.
Yeah.
Like we can go back to Fastly here, right? So every day we're moving our trailing exit point, right? If our exit point was 2027, that's what it's going to be. Yeah. We're moving it down the next day to 1922. We're moving it down the next day, moving it down the next day. Okay. The point, it's the trailing exit point. Because
I got it now.
Yeah.
Got it now.
Hang on, let me draw on this chart real quick. Because it could go, something like this. That is really ugly. But at some point, there is a point where it's going to go up, right? And that's where we say, okay, that's our trailing exit point. And it's not that we're losing what's from here to here, because we've never had any intention really of trying to find that bottom. There's no way to know.
Yes. No way to know. I got it now.
There's no way to know that there's going to be this much room between the actual bottom and where you get out. But having that plan every day, walking it down, since we're going short, walking it down every day, giving it room to breathe, right? Because we're not going to cut it off, right? We're not going to say the first day, the first green candle, we got to cut it off. No, we're going to let it work. And then at a point, it will show it. The data will show us that, hey, it's no longer going down at the speed we need to see. It's going the other way.
Yeah.
So,
Yep.
and it's awesome when you can just look at a chart like this one, right? And you can see like the 5 days, what we're following here.
Yep.
There was a point where it never even looked at the 5 day between $33 as it goes all the way down, and then only here at $28, right? So there's a
Yes.
$5 gain right
Mhm.
there. You didn't have to do anything. You just let it work.
Yes. A little work.
Just let it work.
I like that. I like
Yeah,
that. That gives me a little bit more confidence. That's the little part I was hang up on right there. I know that you explained that, cleared that up. I'm definitely good to go. You
cool.
know, and as I said, I'm learning, to take the small losses like this and stuff like that. And that's the reason why this week I haven't put any trade on, because I said, you know what, one was, kind of I've kind of missed the mark, because sometime at the end of the day when I'm listening to you, I can't really go on my computer and go put a trade on. I put it on, I come home, I plan it, just like I watch your video back over, I plan it, take my notes, and then in the morning I know exactly which strike price I want to buy at and stuff like that. So as soon as the market open, I execute my trade. I get
Awesome.
in, but this week I haven't. I said, I'm going to have him explain this part to me before I put the trade on. Let me clear this up first,
Yeah. And
before.
I understand where you're coming from too, because the market has been let's pull up SPY. The market's been really choppy, right? This is not a beautiful trend.
No.
Not at all. And when you have the stocks that, they're getting chopped inside of that trend, it can be frustrating, there's times like this where it's a beautiful trend and you don't do anything for a
Yeah.
month, 2 months, literally nothing. You're adding to your position every time you get a chance to. But then when it gets choppy, it's like you got to take your small win, small loss, take what you can get while you can.
Yeah.
And like I say, keep those losses small. And that's why we start with the half ATR. That's
Yeah,
why
you can still win big with small losses. I'm gonna get a shirt saying that,
dude, I love that. Yeah. Larry Height, like in the webinar I just did last week, he's like, one of his quotes he said was, it's amazing how rich you can get by being imperfect.
No, for
Yeah,
real.
absolutely. So, all right, man, you said that you had lots of questions and stuff. So I'm here. I'm ready. I have my clipboard
Okay,
here. I'm writing them down.
So, okay. I have, let me go look on I have Peloton on right now. Peloton,
Yes.
right? And there's one thing that I started to do. I started to had a little bit of, I had a trade for my personal purpose. I had a trend line support
Sure.
on
Okay.
Peloton. Because if you look on Peloton, it gets to around, I think it's 2316 and it bounces all the time. And I'm like, you know what? What if I put a support line? I just draw a support line right there and see what it does when it gets there. Does that give me an idea? Because as I said, I do a lot of different stuff in TrendSpot. I backtest the crossover. I backtest the RSI crossover. I do a lot of stuff just to try and find my edge.
Yeah.
At the end of the day, I know your method is working perfectly, but if I can find a little something to tweak it on my own or I'm trying to make the trade my own at the end of the day,
Yes.
That's how I'm going to build my confidence in what I'm doing. So I did that support line right there and I'm watching it today because I'm home and I see that it got there and it did exactly what it did each time it got there before. You think it's necessary to add a support or a resistance line?
So what we are looking at right here, I mean, it totally could happen, but as we know, we can't tell the market what it's going to do.
Yeah.
Right. There's clearly buyers that like that level and it stops the selling. But for me, I'm looking at it like this is looking good. As long as it's set up, I have no reason to even look to do otherwise. Because imagine you drew a support line. Not that I'm saying that you did, but imagine you drew a support line here at 41, right? And then it kind of bounced to bounce to bounce and then goodbye. That's the way that do I have it with me? No. The book How I Made $2 Million in the Stock Market. Have you read that one yet?
No, I just started this one.
Oh, you're gonna love that one.
See, I already love this one already, and I have yours. I have yours right here as well. I was reading about the one of the questions I had about the delta,
Mhm.
but you actually answered it in here as
Okay.
well. So a lot of the questions, as I said, I sat Sunday and over the last 2 weeks, I watched like 30 or more of your videos, and I just went in, took notes, because I was hung up on that one spot right there. I was trying to find the answer. Maybe you answered it already. And yeah.
So with what you're describing here, Minervini really likes patterns like this where he
Yeah.
sees it knocking on
Yeah.
a support or a resistance, right?
Resistance. Mhm.
And when it breaks through, that's when he buys, which would be the opposite of what you're just talking about here, right? Where it's like, well, if it's not going to break through, then I'm not interested. You know what I mean? This,
All right, let's take profit now. Being as we entered at 27.51, I'm like,
sure,
I'm out. You know,
you
it got to where I think it's gonna bounce. I'm out.
you
So
could do that,
that's my mentality, you know.
right? But imagine like maybe that's the point where it breaks and breaks hard.
Harder. Mhm.
Yeah. So that's why as people can draw support and resistance, but really all that matters is what is the price actually doing. And at
Yeah.
the moment, like we could look at right here, like I was saying, was it like 41? I think, yeah. We could look at 41, and some people would look at this, right? And they see the bouncing and they're like, okay, cool, I'm not interested. But other people like us, we see the trend line, and the trend line clearly points in one direction. And when it passes through, right, when it actually
Yeah.
moves through that direction, there's no telling where it's going to stop. You know what I mean? So we just let it roll as far as it can. That's hard. That's hard to just trust. Hey, you know what? I got to let it run. And it could be 2 months before I touch this trade. And in those 2 months, I mean, the only way it stays on is if it's working, right? Because, for example, let's say we put on a trade here, $46. The only way it comes off is when it stops working, right?
Yes.
If it's going sideways or if it's going back up, the only way is if it stops working and hits one of our exit criteria here, you know? Okay. So what else you got?
Yeah.
Well, let me go back. Let me circle back to support just for a second here. There are absolutely buyers at every level, just like there's sellers at every level.
Yeah.
And as far as support goes, I'm not saying it doesn't exist. I'm saying when the trend is moving in one direction, you got to follow that trend for as long as it goes. And if it does encounter some bouncing at a certain point, that can definitely happen. And then the trend can definitely reverse. But then at some point, it could continue on for who knows how long. So yeah, well, it's not the way I trade, but I'm not saying that it's wrong if it works for you, because that at the end of the day is really what matters. Like you're saying here, right? Set your own trading plan using some rules to build your confidence. For sure, man.
For sure. And then the relative strength. For a while, I was hung up on that, and think upon a video where you kind of broke it down.
So, every day when we get through the trading room, we talk about, let's say it's an offensive day. We've run our charts and we've got like 60 of them that pull through, right?
Yeah.
I don't have time to be trading 60 things. And obviously you've got other things you want to be doing too, right?
Mm-hmm.
How do we find the best stock to trade for that market? So this is the concept. Actually, if you go back to the how I made $2 million in the stock market book, he talks about the relative strength in there too, because every stock can be compared to each other. And TrendSpider does have a really cool feature where you can do that. But what I like to do is I like to compare it to the market, right? So if we look at this particular angle, can you see that?
Yep.
So down here is a little feature in TrendSpider called the price compare tool.
Okay, I never tried that before.
Yeah, I like it. It visually shows what the relative strength scanner does for us with numbers.
Okay, so showing you that's on the bottom. Is that okay?
Yeah.
That's SPY.
You'll just add it here. So you'll go up to indicators.
Yes.
And then just type in relative price.
Okay.
Is it relative price or it's price compare? Sorry, price compare. And then and even actually, I can add another one here, and I can change it to be, instead of SPY, we could do something like Amazon. I don't know why anybody would want to compare their stock to Amazon, but whatever.
Yeah,
you could.
Yeah.
So here, looking at this, you can see that based on these three charts, Amazon is probably the one that has the highest relative strength, and Peloton has the one with the lowest relative strength. And I'm just drawing just really crude trend lines so you can see the direction of that line, right? So this has the steepest slope.
Yeah.
This is in the middle, and this is the shallowest slope.
Yeah.
So that's what we're trying to establish here with the relative strength. Is I want to make sure that when I get into a stock, it's not just set up with the chart. I want to make sure that it's like, if we're going short, I want to make sure it's the shittiest chart out there.
Yeah, for sure.
I want to make sure that if this stock is going down, it's the one that's going down the most.
The
right?
hard, yeah.
Yeah. And then, so there's relative strength, which is like if the SPY is traveling at 100, how fast is our stock traveling, right? So for example, Fastly is traveling at 42. So it's really getting hammered, right? If the market's moving at 100, it's moving at 42.
42.
But not only that, but it's going down even faster, right? It's traveling at 42 and going down even more because it's relative strength delta. The rate of change of the relative strength is,
okay, so that's what that one is for, the rate of change in the delta. Okay, you have it right here, the relative strength delta over, you said you have it over 10%.
Yes, I like to see it greater than 10%. I like to see it greater than 10% because when I was trading it, and I found that, on occasion, I should say greater than 10% going up, less than negative 10%.
10% going down.
Yes. Yeah. What I have found is that the relative strength matters compared to the SPY, but relative strength to itself also matters. And that's kind of what we're measuring here. For example, when I figured this out, I was trading oil, and oil had like a 250 relative strength at that time. And it was a monster. In fact, we could look at oil right now, considering oil is so strong. That would give us some interesting results.
Yeah, lowercase.
It
came up still? Okay.
It'll still work.
Oh. I thought it didn't work.
Oh my gosh, look at this. So the relative strength of oil is 747%. So it's amazingly stronger than the SPY and getting stronger. Where I figured this out was oil was trading at like a 200%, 250%, something like that. And I was putting these trades on, and then it was like I was buying the top. It was like, oh, these are going, but they're not going anymore, right? Kind of like you were talking about with Peloton. If we're finding a bottom, that actually would relate a lot to what we're just talking about here. Give me a second here. Remove this ray annotation. Okay, so let's say that this is a bottom. Every time I would sell short, it would be like, oh, that's it. It's not going further, right? Or in oil, every time I buy it, it was like I was buying the top and it was going down. But that was because the relative strength delta, the relative strength rate of change, actually was negative. So while it was 250 on its own, it was like if the SPY's traveling 100 miles an hour, it's traveling at 250, but it just slammed on the brakes. So SPY's catching up, it's slowing down. And that's why we got to include the relative strength, basically comparing it to itself. Relative strength on its own compares to the SPY. Relative strength delta compares to itself. Is this still getting stronger? Does that make sense?
Cool. Yeah, most def. Yeah. So these are the little stuff that I and by the way, I don't have that slide. The slide you just pulled up, I don't have that one.
Oh, I mentioned this yesterday. I'm going to make a new slide deck here because everything I've written on this is to be bullish, and of course, as we've seen, it's very truthfully.
It's fine.
When I wrote this, I never expected we'd be going into a bear market like right after. So yeah, I'm basically going to duplicate it, switch all the words backwards, right?
Yeah.
And then I'm going to put a red border around the bearish and then a green border around the bullish. And then I'll share it with everybody. So I'm going to get that done over the next week.
Because the one I have, I downloaded from one of the Friday webinar.
Yeah.
And I just cut out what I wanted from it. I just cut out the slides from it. And that's, I understand that way better now.
Okay. Hey, how are you liking those Friday webinars? Do you feel they're useful?
The Friday, yes.
Okay.
It definitely always go back. That's where, as I said, I had some questions, but I have all my questions here. This is my notebook, and this is from me just watching the videos from the last 2 weeks, answering all the questions that I had written down for you.
Ah,
So, how
awesome.
to calculate an ATR, I already, did that. Y80 delta, stuff like that. The defensive day, stuff like that. Managing risk and stuff like that. And we went over managing risk, which is one of the big ones for me personally. Now that I understand that, now I'm feel more comfortable taking these trades because I know exactly what to do. I probably don't have to watch your videos. At the end of when I get home, I can just go on, know the tickers that you talked about, put them in a relative scanner, go in, put it on my chart, and I know exactly what to do right now.
Awesome.
And
You
that
know,
is that makes me happy. So that's why I
yeah.
at the end of the year, as I said to my wife, is as long as I don't lose anything, I am fine. And my goal is to, even if I lose a little bit, I'm learning, I'm practicing, staying consistent, because this is not something I want to just do now and then stop a month or two from now. I'm buying books.
Yes.
This is my lifestyle now. you know
Yes.
this is my lifestyle now. I just if I could share my other screen I just showed you, how to make money in the stock market. I bought the Kindle version because I'm like, you know what, everybody's talking about this book. I saw you popped it out. Everybody, Mark
Is it
Manvini.
this one here?
Yes,
Yeah.
everybody that I watched a podcast with this other guy. It's Oliver Kell.
Oh yeah, yeah. He was
And
I know Oliver. I don't know him personally, but I know of him.
yeah. So, and then yeah, he said he basically got his strategy from that book. And I'm
Yeah.
like, why I am not reading this book? So I, as soon as I finish this, I'm gonna order that one from Prime. But I gotta finish Trading the Zone first, because I don't want to keep buying books and I don't finish reading them.
Yeah.
That's a problem for me. I'm not gonna lie. I'll read 5 chapters and I park it.
No, it's good. We talked about before how my goals every year or last year was to read 110 or 100 books. I read 110. This year, I want to do it again because I had the best year of my life last year, like financially, spiritually, with my family and everything else. And so it's like this needs to be part of my life. So I'm at
Yep.
24 books. I haven't written one down for this year already. 3
Yep.
fiction, 21 nonfiction. But I don't do it all at once, right? I don't just sit here all day and read. I mean, that'd be great, but I got other things to do too, right? Just like
No,
you
I
do.
I kind of formulated a little strategy now. Started this week. I'll try to do at least a chapter a night.
Mhm.
If I do a chapter a night, I can read one book a month, pretty
Yeah,
much.
I like that. Let me ask you a
And
question. Are you a morning person or a night person?
I'm a night person, man. I'm not a morning person at all.
Yeah, I'm a
I
morning
sh-
person.
I
Yeah.
struggle in the morning, and I'll be up till 2 a.m. in the morning, and then I got to go to work at 7. I
Oh yeah.
struggle. And it's the same thing on the weekends. And unfortunately my son is the same way. He's not a morning guy at all. He
Well,
he's a
one of
late
the
night guy.
one of the reasons I ask is because for me, like I start my day with reading, right? I
Mhm.
will sit down. I have, 45 minutes before I got to get the kids up for school where nobody's up in the house except for me. In fact, I have it right here. I have this little, it's a book light, but rather than clipping
Oh
on the
yeah,
book,
yeah,
it goes around my neck.
yeah.
And
We use those
so,
at work.
yeah. So I'll sit in the dark, read my book because ain't nobody bothering me, I'll make all
Yes.
my notes, get everything like that. So yeah,
Yeah.
having that time that it's Kavan's time, right?
Yep.
It's not I'm going to spend it with my wife or girlfriend or texting or on Twitter or anything like that or with my son. It's this is Kavan's time.
No, this is my lifestyle now, man.
Yeah.
I've been making big changes. I used to be a heavy binge watcher. I watch every movie on Netflix,
Oh yeah.
right? And I'm like, I'm stop giving these people my time. All these people I'm watching are rich already. They got the millions, they got investment, they got retirement, and I'm here. And one of the things that scares me the most is that as I said, I'm at work and I'm watching these guys, and they're getting older. And I mean, maybe 2 out of the 20 or 3 out of the 20 guys can probably go retire and be okay after retirement. The rest of us are like, we don't have no retirement. Yeah, we have a 401k, but that you can't retire in that.
Yeah.
There's no way I can retire in that. That probably lasts me 6 months.
What what you described right there, right? As far as like the binge watching the Netflix, I think that's a real problem with just people in general, right? Because I talk to my family, right, and they ask how things are going. I'm telling them, and they're like, "Oh, hey, have you watched this entire series on Netflix yet? Have you watched this other entire series on Netflix?" And I'm like, "No, I don't watch TV. If I watch TV, Kavan, it's like SpongeBob or like kid movies because I'm spending time with my kids.
Yep.
I don't watch anything for pleasure. Like if I do, it might be South Park because I think South Park's kind of hilarious and it's like 22 minutes. I can give 22 minutes.
You can give 22 minutes.
Yeah, I can do that.
Nah,
but yeah,
I'm reading now, man.
I'm so proud of you for that. That's so smart.
Now. I'm slowly but surely, hopefully over time, I get to your curriculum that you have, and I can go through that and build a base. I'm glad that you put that in the 10-minute training room as well.
Yeah.
Because I'm like, okay, I got a structure I can follow, but I tell you, man, I'm really excited. I'm glad I came across your video. I just clicked on it. I just saw it today in Benzinga and I wanted something to listen to and I clicked on it, and that I'm going to find a video. I'm going to text you that video on Twitter.
Yeah, please.
And that one video changed everything for me. It changed a whole lot for me. And the mere fact that anybody can do this, 10 minutes a day and follow this strategy and change your lifestyle, it's awesome. It really is awesome, man.
Come on, I'm writing this down because this is good stuff. I'm going to put this on the website. Anybody can do this. 10 minutes a day strategy is a lifestyle.
Yeah. And as I said, I went back, I watched your video, and I have a note. I have my notes right here. And you pretty much, your previous videos that I watch, as I said, what is a delta, eccentric value, how to calculate the ATR, stuff like that. Those are stuff that over the last 2 weeks that I've learned by watching your video. I didn't even Google anything, to be honest with you. I watched your video, I wrote them down in my little notepad, and then I just transferred them to take a picture of them, transfer them to my computer, because I was caught up for the longest time, like, why 80 delta? And then I understand why 80 delta, because I was just buying before you. I was just buying. I wasn't even looking at open interest, to be honest with you.
Oh yeah, that's important.
No,
yeah,
I was never even looking at open interest. No, I got, the guys at work, the first thing they come and they say, like, look at this open interest. What do you think about this? It has a lot of open interest. And then I'll go through and I explain to them, what is the eccentric value, how to calculate it. And they're like, man, we got to do so much calculation. I'm like, yeah, if you come over and subscribe to Chris and have
I'll do it for you.
yeah, you know what I'm saying? And I'm like, I'll send them videos. I'll find the videos and I'll send them videos of you. If you look in our chat room, it's full of your videos right now.
Oh, that's so sick, dude. Awesome.
Yeah, because I blocked out all the Twitter noise. Like, I blocked out all the Twitter noise because those trades aren't my trades.
Right.
And by the time those trades hit your screen, they're either going the wrong direction already.
Yeah.
So, and there's no plan. There's no planning. I think it's just guess. They get up and they guess. And I'm like, and now you have me going on there back. Whenever I go in there, I just go in there to look at what they're talking about and I go back test it. And I'm like, I'll never buy this. I'm not buying this. This don't even make sense. And I'm like, I can't believe I used to have this mindset. And it's just crazy how I think I signed up with you in November, December.
Well, we started November 11th. So it was either November or December.
Yeah, it was in November. And I'm like, if you look at my posts on Twitter, they just went down and down until they completely stopped because I'm just don't even want to be on there no more because it's so much noise. Yeah. And that's one of the things that I like about, your platform is there's no noise. I mean, it's good and it's bad that you don't have a chat room when you look at it sometimes, because I think the chat room a lot of times create a lot of noise when everybody's, looking this, and people get distracted by what other people is doing. Again, the FOMO. If someone sees someone over here making money by doing one thing, then they might lead away from what you're trying to teach to go to that whatever that person is talking about because they see that person's having success.
Mhm.
You know, especially if you go along and maybe you have a week where you have 5 losers that week,
Mhm.
and you're like, oh, this strategy is not working. And then this person is like posting picture of their gains and their gains, and people are like, let me go check out what Kevon is doing over here because Chris ain't rocking right now. You know, so it's good and it's bad because a lot of time I want to share like my chart or something, and I don't have anywhere to put it, and I'm like, but it doesn't bother me no more. Trust me, I'm happy that I'm learning this. So
That's great.
that's a minor problem.
Okay.
That's not a major problem. But maybe this might be my last question.
Sure. Hey, by the
Um,
way, I saw this on Twitter and I retweeted it. And so this is from Michael Covel's Trend Following Books, which is where like all my mentors were sending me, go read this book.
yes,
Um, it's that trading's a waiting game, as you've seen. You
yes, it
sit,
is.
you wait, and you make a lot of money all at once. The profits come in bunches. And hang on, let me pull up. Let me go to the trading room real quick. I'll show you what I mean. Hang on, this is worth our time. Hang on.
No, it's fine. Take your time, Chris. I got time. I took the day off
Oh,
just so I
good.
can have this conversation.
This is awesome, Kavan. This is what I wanted. This is just exactly. This makes me so happy. Oh, in fact, I wrote this down a couple minutes ago. What you were describing was this was the reason I started the podcast. I started the trading room. I started doing this and putting myself out there was the wealth ripple effects. And I say that, and I'm getting goosebumps right now because it's
Yeah.
totally working.
No, it's
Because
working.
you just taught these guys at Mercedes-Benz something that they would never have come across otherwise.
Nope.
The wealth ripple effects are real, dude. And you're part of that.
Yep.
Oh
You
man,
know,
that right there gives me so much pleasure.
Yeah.
Okay, hang on. So
Mhm.
going back to what that quote was, right? You make all your money in bunches, and then you spend the rest of the time just trying not to lose, right? Trying to spend the trick is when you're going sideways, not to lose too much in between. That was me last year. That was Minervini. That was everybody. Everybody
Yes.
hit their home runs in the first quarter, and then they just spent the rest of the year like tiptoeing, right? That's what these
Yep.
little things are, right? A little, oh nope, not working. A little bit, not working. Okay, and just staying flat, right? And then you get to keep those gains, you know. So, dude, yeah, exactly. It's all about taking what you can. The profits will come, and they will come in big bunches where you're like, oh my gosh. Like I remember when this all clicked together and I started making money. I could not believe how fast I was making money, but it was in a very short amount of time. And then
Yes.
that's where people get really lost, right? They make a lot of money. And this happens to a lot of people, right? They make their huge first few trades and they're like, this is amazing. But then they end up blowing it over the next 6-8 months or so. Even what's his name? Brian Pierpont. He talked about that.
Yes.
He got some major winners right off the bat. He did really good, and then he gave them all back.
Yes. They
Yeah.
love the guys, they love that podcast, man. We probably watched that podcast like 3 times already.
Oh, awesome.
Yeah, because it what he's describing is what we were going through last year. One guy, he was trading, he was making, but he was like going off news. He was buying the news. Every news will come out and he's on Twitter and stuff like that. But the first quarter of the year, he was making a lot of money. And we all saw that. We're like, wow, and we started to follow the same trend. And then I'm like, I can't do this. There's no structure in there for me. I like structure. I like a plan. I like a rule that I can follow. Then you'll know if it's working or not. Then you can tweak it, make it better. And that's what I like. I was reading something earlier today, and it says, do you think that this market right now is favored more to day traders than swing traders?
I think I saw that same thing too. I think it was Steve Burns who said this is a day traders market than a swing traders or long-term investors market.
Long-term investors market.
Yes and no. I mean, what we're experiencing, this is why you got to give trades room to breathe, right? Because it's going one direction. We can see that as clear as day, right? And you can take advantage of that. But you got to give it room to breathe because there's days where it's going to breathe real hard in both directions. And that's why having a back tested trend line, right? A back tested exit point where you're giving it the space to move, right?
Mm-hmm.
Even though on the 5-day, we're following it real close because of risk, right?
Yeah. Mm-hmm.
Something like Peloton, It's on the 10-day right now. We might change it up to the 5-day later, but we're giving it room to just work, right? And you could do this with the 50-day, right? The 50 days, the red line. And if you're following the 50-day, right, you would have got in at 96 or something like that when it broke below.
Yes.
And then not touch it again. And now it's at 23, right? You can do that. The only issue with going further, bigger moving averages, longer term moving averages, is that you're taking additional risk that you can really cut down dramatically. Like from here to here, that's $21. If it goes the other way, you got to give up $21 of profits before you're able to get out. So
yep. But a lot of the older guys that I've been seeing now, because now that I'm reading more, I'm seeing these names and I'm Googling them, looking them up. These guys normally trade off the weekly time frame. And
you're going to find a lot of that in this too.
Yes.
Right? Yeah.
Yes. They were trading off the weekly time frame. And I'm like, so that gave me an idea. I'm like, in my spare time, I'm going to, do my own strategy, set up my own backtesting strategy for a weekly time frame.
Yeah.
And see, maybe I can find something that's set up really good and buy a leap option, that's probably I can afford, for a leap. And I'm like, okay, that's one thing to think about that I can play around with, because you never know, man. Dude, my job is fixing cars. So when one thing don't work, if the manual don't work, you got to go improvise. You got to go find, and then you develop your own. And then when another car comes in with the same problem, you're like, okay, I saw that on the last one. This is the problem. And that's how our mind works. I'm a problem solver. My day job is solving problems. So, maybe that's why, I kind of understand this a little bit faster than some guys or some, because the way my mind thinks is to always solve a problem. And when I saw that they did that on a weekly time frame, I'm like, I'm going to take some of what Chris is teaching me. I'm going to see if I can build my own backtest strategy in TrendSpider and test the weekly chart. Maybe I can find something I can buy in a leap that's cheap too. So that's one thing I'm looking into, but I got to finish reading my book first.
No, it's good. It's good. Think of it this way, right? If you're going to a weekly chart, you're basically just zooming out on a daily chart.
Yeah.
And you could do the exact same thing, but with longer moving averages. So if you do like a 10 period weekly average, that's essentially exactly the same data as a 50-day moving average, right? 10 weeks, 50 days, exactly the same data.
Yeah.
So when you do that, just keep in mind, right? Your time frame is longer. So you can't let any sort of shorter time frame volatility sway you. You know what I mean?
Yeah.
If you're going to commit to running the 50-day moving average, that's where you got to commit, because you can't just bounce in and out and be like, oh, I'm gonna run it this week, but not next week. No, I'm gonna take everything off, right?
No. Yeah. I would do it, and I would just I have a watch list that I create. Like right now, I have a watch list that I created off Finviz, and I back tested those stocks. Were I would like, let me see if I would have bought calls on these, where which direction it'll go, and I still practice how to do my breakouts and draw my trend lines. And I have just a watch list for those. I don't buy any of them. I just watch to see. I just use them as mental notes. Okay, what they're doing right here. And you use the Kentner channel. Yeah. Right.
I do. And
I don't even know how to use that. I use RSI and slow stochastics. And I kind of know the difference in between because I watched a few videos of it. But I feel, because I use TradingView still. Even though I use TrendSpider backtesting, all my graphing and my drawing, I do it on TradingView. I feel a little bit more comfortable there.
Sure. Well, I was just going to say with Keltner channels, I didn't even want to believe in them. I didn't. Like when, so Greg Gossett, he's been a podcast guest of mine. He learned from Steve Burns as well, and also from Dr. Alexander Elder. And he put together a course and asked me to take it and give my feedback. So I took it. And in there, he talked about Keltner channels establishing like an overbought, oversold type level. And I was like, nah, he's not anything. That doesn't make sense to me. But then, when I was putting on trades and, somewhat like that relative strength scanner, when I was putting on trades and it felt like I was buying the top, and then I added in, let's say if it's the second Keltner channel, And if I did not take the trade over the second Keltner channel,
Mhm.
it would have been hella more profitable. Right. And so I was like, wow, maybe there is something to this. So I mean, like that's part of our back test is,
Yep.
does this fall into the Keltner channel or not? And it's very similar to a Bollinger Band if somebody want to look at that. But
Yeah, I saw that.
yeah, it made sense to me once I realized we use ATR for our position sizing. We use ATR for our initial half or our initial trailing stop. I don't want to say trailing stop. I want to say exit point. Our initial planned exit point.
Yeah.
We use ATR for all of these other parts. The turtles used ATR in the turtle trading, which is how I got started into this. And I'm like, why wouldn't I consider a certain ATR showing me if something is overbought or is oversold and just waiting for it to come back a little bit before putting on the trade? And so once I did that, I was like, wow, that was a really simple ad. And it gave me confidence, because confidence is really everything when you put on trades. It gave me confidence to say, you know what? It's not overbought. It's not oversold. It's still doing its thing. And I'm going along with it,
Yeah, but man, I appreciate you, having this conversation. I appreciate everything that you taught me so far, because I've gotten hella confident, right now, that I understand how you manage risks a little bit better. So that I'm definitely going to start implementing next week, and yeah, man, I definitely, I'm going to keep rocking with you right now. Just keep
Dude,
going right now.
that's awesome, Kavan. I'm so glad that what I'm doing and creating that wealth ripple effect is working for you, and it's working for your network of people, the sphere of people that you have influence over. You are directly giving them that wealth ripple effect. This is awesome. This warms my heart and makes me feel so good. So Kavan, thank you, dude.
Yeah, it's going to be even more when I can have that proof of concept, because people like proof of concept.
Yeah.
And when they can see the proof of concept, they're going to even want it even more.
It'll be like later on this year when and hopefully I can't make any guarantees, but be later on this year when you're like, oh yeah, you know how he hit 172% last year? This year he's at 200 and going. And yeah, I mean, I don't know if that'll happen. That'd be awesome. I hope it does. It's planned to. So hopefully
speak it into being, man. You got to talk. You got to put it out there. You got to put it out in the universe. You got to put it out in the universe. But I appreciate this conversation a whole lot.
You're welcome, dude. And like I said, this was how I can pay you back, right? You come to the trading room every day. You're listening. I can tell that you're up to good stuff. And so I was like, I gotta chat with my man Kavan. He's doing awesome. So Kavan, really proud of you. Really, I am.
Thank you, man. Thank you for your help.
You're welcome.
I like looking at my charts now, and I know exactly what I'm doing, where I need to be at. That's it. I don't need to. I do check it during the day, but not like before. I do set alerts, but not like before. Just to keep my eye on the ball and still see what's going on. But thank you, man. I appreciate it a whole lot.
You're welcome.
I appreciate it a whole lot.
Would you say that we've helped you take the guesswork out of trading?
No guesswork at all. I can tell you that. Because look, I don't have to learn how to read a candlestick, which was one of the biggest thing for me. And I'm like, where I'm going to find time to do this? I don't have to sit and draw a trend line. I go in, run my strategy tester, grab my data, put in a relative scanner, whatever is set up for entry, I back test them. If they pass the back test, we look on liquidity. That's it. That is it.
Yeah.
That's all we need to do.
Exactly.
So I trust me. I'm going to be using this strategy for a really long time. Dude. Whatever changes you make, I'm going to be making those changes right there.
Yeah.
So definitely, I don't know what is going to come out after I'm finished reading that book, but based off of the fact that all these successful guys have read that book, I think that's a book that I got to sit and study. Yes. I'm not going to blow through it. I'm going to sit, read it, study, analyze it, and see if I can find a strategy that I can create for my own self as well.
Yes. In fact, when you're reading it, a good portion of it, like at least 100 pages, are charts. And he's got, notes and stuff written all over them. Keep in mind, right? he's looking at cup and handles, he's looking at bases, he's looking at all this stuff, but he also has moving averages on there too.
Yes. Mm-hmm.
If you just follow those moving averages, you don't have to worry about counting bases. You don't have to worry about cup and handles. It's right there. Yes. So when I'm reading this, I'm like, well, if I just look at the moving average, yeah, I agree with everything he's saying. And I go to the next one. Yeah, I don't have to worry about, this cup and handle or this breakout, right? It's just moving average. So yeah, like I said, I've taken the best stuff that I could find and I've adapted it to be as easy as possible.
That's perfect. I don't know you even did that. That's perfect, man. Honestly.
Cool. Well, Kavan, thank you so much for your time, dude. I really appreciate it so much more than you'll ever know. And we'll get this on the podcast at some point, but I just really wanted to make sure that I could do you a service by helping you out, answering all your questions, and then we could, help out anybody else who's listening, answer maybe some of the same questions they had.
Yes, I thank you. Thank you, Chris. Appreciate
You're welcome, dude. Have a great day, and I will see you in about an hour in the trading room.
Yes, for sure.
See you there, bud.
Take it easy. Goodbye.
Hey, don't forget, before you head out, head to secretinvestingbook.com right now to get your free copy of The Secret Investing Book. This is how to finally get a positively unfair advantage in the stock market. And it has 13 of the secrets that Wall Street does not want you to know. And I want to send this to you for free today. Just help me by covering shipping. And the way you can do that is by going to secretinvestingbook.com. That's secretinvestingbook.com, and I'll ship this out for you right away. Thanks so much. I'll see you there.